Everybody, it's Mr. Booker here. It's Sunday night. It is March 22nd. Let's take a look at the charts here and see what's coming up this week. We've had some interesting bullishness in everything against the U.S. dollar. Everything seems to have strengthened a bit against the dollar. And the question is, are we about to see some movement upward here? And as a case in point, or as a focus for the week, I want to look at the British pound US dollar. You'll notice here that it's just all red. It's been falling and falling and falling. It's all red. There's been no positivity whatsoever that lasted for very long. We couldn't even rise up to hit the January monthly pivot. We're nowhere near the yearly pivot. We're 1,000 pips away from the yearly pivot. But we've got this interesting formation down here on the British pound that seems to suggest that there is a bottom in sight, and we may have seen it. And the dollar may be on a resurgent path. Here we are on the 15-minute chart. We got a really nice bullish divergence on the 15-minute chart, and I would look for that again. The problem is, I'm not exactly sure we're going to see that on a 15-minute chart. If this is for real, if this dollar weakness is for real, and it does appear to be the case that it's for real, then what you want to do is look at the British pound US dollar or the euro US dollar, and you want to consider waiting for a dip here on like a 5-minute or a 15-minute chart and bullish divergence. Now, it seems absolutely insane to even talk about this, because we've just been dollar bulls, dollar bulls, dollar bulls, dollar bulls. But remember, I mean, we've now priced in all kinds of interest rate hikes that still haven't happened. And you have to also remember that the interest rate differentials are exactly the same as they were before. So on some of these currency pairs, or in some of these instances, it just doesn't make financial sense to hold on to something that's not paying what you thought it might be paying eventually. And I think one of the really easiest ways to see this played out is in the New Zealand dollar, US dollar. Obviously, you get paid to hold the New Zealand dollar, US dollar. And there hasn't been a soul on planet Earth that wanted to do that. But this is significantly divergent. And just massively. We haven't seen a green candle on this. On the daily chart, we haven't seen a green candle here since like July of last year. I mean, it's insane. So friends, we're about to see the New Zealand dollar, US dollar go green. And I want to be long the New Zealand dollar, US dollar. I want to be long some of these currencies that have been just absolutely getting hammered. And the New Zealand dollar and the British pound are two of those currencies. And I think that if you look at these currencies objectively and you look at the situation, I think there's a case to be made that we're going to see some bullish movement here on some of these currencies. And it's time to begin to consider how you might take part in that bullishness. So on a drop on the New Zealand dollar or the British pound, even on the 15-minute or even on the 5-minute chart, and the creation of bullish divergence, I would go long the New Zealand dollar, US dollar. I would go long the British pound, US dollar. I would go long the euro, US dollar. Now, when it comes to the dollar yen, for example, does that mean I would sell the dollar yen? Well, you're dang right I would, but it would have to rise upward, and it would have to then create bearish divergence and fall. And I don't like Japanese yen currency pairs for most trading systems. I really don't. But I would consider it in this instance. So the theme for the week is to watch for dollar weakness. Now, the Fed's probably going to raise interest rates in September, possibly in June, but more likely in September. And eventually, the dollar's going to come back, and it's going to come roaring back with a vengeance, with an absolute vengeance. But in the meantime, there are a lot of traders who can't see the big picture. And they can't see that in all financial instruments, there is a pattern, there is a give and a take. And we've gotten the take down. The take has happened. It's time for the give. And we will see this week if that's for real. We will see in the next week or so, maybe even 2 weeks or 3 weeks, we will see if there is a possibility of the US dollar weakening a bit here and traders sort of coming down off this crack cocaine binge on buying the dollar. I'm not saying it doesn't make sense. I think over the next few years, it probably makes a lot of sense. But you got to remember that if the world economy is going to justify raising interest rates in the U.S., eventually it's going to justify the British pound. It's going to eventually justify the New Zealand dollar. And some of those interest rates are already higher than the U.S. dollar. Some of those are already higher. So if we're going to go into a period of tightening monetary policy and raising interest rates, there are other currencies that stand to gain way more than the U.S. dollar. That's just my 2 cents on the issue. This week you'll see me selling dollars across the board on the short-term charts if I can get the trades to come through. I'll be using the robots from Trifecta 4 to do some of that trading. I'm Rob Booker. I can't wait to see you in the TFL chat room hosted by Slack. And I look forward to catching up with you on Monday morning. Bye for now.